It's 5 a.m. here, 11 a.m. in Germany, and here's your top 5 at 5. Europe breathing a sigh of relief as its biggest bank reports better than expected results. Another big exit at Facebook, the company's top lawyer calling it quits. President Trump striking a downbeat tone ahead of a crucial meeting with the EU today. A big money, big weather alert millions across the east under a flood watch, while record high temperatures scorch the southwest. And we've got a winner. One lucky person likely to be calling out sick today. They hit the $522 million Mega Millions jackpot. Wow. It is Wednesday, July 25th, a day that person will never forget, as Worldwide Exchange begins right now. All right, good morning and welcome from wherever in the world that you may be watching. I am Brian Sullivan. Let's see, $522 million. You take the lump as $350, half that to Uncle Sam, $175 million. That sounds, Rob, does that sound pretty good? That sounds pretty good to you. It sounds pretty good to me. Well, if you are not that lottery winner, you probably care about this, how the markets are looking right now on this Wednesday morning. So here you go. Stock futures are, I would say, flat. They're down 12. We'll see if that changes, obviously, throughout the day. Not a move right now. The Dow, though, already up 4% this month. Bond yields also a little change on the 10-year side. The yield is about 2.93%. But you got to watch the spread between the 2-year and the 10-year. The 2-year, by the way, at 2.65%. What do you say? Why do we care? That's the highest it's been in a decade. In other words, short-term lending costs have gone up as the Federal Reserve has raised rates. Well, outside of interest rates, the big news today will likely once again come around trade. It's been the story or so for the last month. But despite all the tough talk and concern about a full-on trade war, something rather interesting has happened. Stocks in the United States have gone up. Let's bring in Art Hogan, Chief Market Strategist at B. Riley FBR. Art, you guys put out a spectacular note the other day where you highlighted some of the moves on the back of the trade war and effectively saying, noting how small cap stocks have gone up more than 10% since the president really began talking about it. Why do you think that stocks have shown this kind of resilience, even with all the fear and loathing in the headlines?
Well, I think there's three concepts here, Brian, and I think, and thanks so much for the intro. The biggest concept is we believe something's going to work. We're going to find an exit ramp to this trade tariff, concern that we have, and it's going to be something that takes us to a better place in trade. I think the president, the administration is using a strong economy right now to get more equitable global trade, and I think the markets are looking at it and say there is an end game here. Unfortunately, we just don't see it yet, but we may have some glimmers of hope today in the White House. But I think the point that you made about small caps outperformance is the market really is paying attention to this, and you'll see that the Russell 2 is up 2x what the S&P 500 is up right now. The same is true for the S&P small and mid caps. So we're seeing real differentiated trading, and certainly the large cap industrials, the multinationals, have been hurt the most since this conversation began. But it's certainly going to be interesting. I think today's a pivotal day because you get both Jean-Claude Juncker heading to the White House, hopefully getting to a point where they can say, okay, we've found a process to talk about tariffs so we can avoid the next leg in this war, and that's tariffs on autos. Second piece of that, though, is China has the ability to approve this Qualcomm NXPI deal today. Both those things happening at the same time. So it could be a very pivotal day. We'll find out later in the day how that turns. But both of these could look like olive branches and then what otherwise is a cold war for trade. Yeah, you know what? At the end of the show every day, we do this RBI random but interesting. I think that we could have another segment right now called WBI. Wonky but important. I think you're bringing up some important stuff, Art, which is this China NXP ruling, as well as the Jean-Claude Juncker. I don't know if any more market attention will ever be placed on an obscure Luxembourgian politician coming to the White House than today. But what happens, Art, and I hear about the optimism, but what happens if things do turn south, that we do not get some kind of a deal, that ultimately the egos win out and we can't solve the trade issue? And we get that $200 billion tariff on European auto imports. Yeah, that would clearly be a negative. And that's not priced into the market right now, especially if you look at some of the automakers, both domestically and internationally. So you're a car guy, so you know this better than anybody here. I think that there's a very complex supply chain for autos. A lot of international foreign car makers produce autos, manufacture autos in the United States and export them. So this really gets messy, and this really hits the Eurozone in the jugular. I think they're very motivated to get something done. I just don't think Juncker's here to say, say, okay, no tariffs on anything, but I think he can introduce the process. He can say, okay, here's how we negotiate this and get to a better place. And that would be a step in the right direction, because it appears right now there is no negotiation going on. I think we heard Kudlow talk about this last week. We're not at the negotiation table with China, and that's where we need to get. My guess is this plays out until at or around the election time, and then perhaps we'll start to get some more good news. And I think that's the way this is being choreographed.
Is trade and the possibility of an increase in trade tension the biggest risk? Or is it interest rates? Or is it something else, Art? And I'm saying a risk to the equity market.
Yeah, risk to the equity markets clearly right now is trade. That's number one, and it's number one by a long shot. I think to a certain extent we start to get concerned about what the offshoot of trade will be, what it does to the dollar. And when you hear companies reporting, they're talking about the strong dollar and how that's affected their sales, especially some of the multinationals that do more than 50% of their sales overseas. I think this, secondarily and related to monetary policy is the shape of the yield curve. So I think that when we think about that, we have more control over that. There are things that we can do to steepen that curve. We can have a Fed that slows down a little bit and perhaps only goes 3 times this year. We can have a Treasury that issues more new debt at the longer end, or the belly end of the curve, the 5s and the 10s versus the front end of the curve, which they've really been focused on. We can have a Fed that, in quantitative tightening, lets more of the long end roll off. So we can see things happen to broaden that shape of the curve. But right now, I would tell you, trade globally and certainly domestically is the number one concern. Yeah. And we've heard about that the most in conference calls during the earnings reporting season, more than anything else.
Art, by the way, that RBI that we do at the end of every show today, it's a data point from your notes. So if you're still, check it out at the end of the show, about 5:58. Art Hogan of B. Riley FBR.
Fantastic.
All right, take care. Thank you very much. All right, well, outside of trade, one of the biggest concerns for the global markets has been the fate of Deutsche Bank. The troubled German bank has lost nearly 40% of its value this year, all on concerns about its balance sheet. Well, today, maybe a little bit of that fear may be relieved. Deutsche Bank reporting better than expected results. Net profit did fall 14% from a year ago, but it still topped expectations. Deutsche Bank also giving an update on headcount. The bank trimming 2,000 jobs so far this year as it undergoes a massive turnaround plan. By the way, shares of Deutsche Bank not necessarily being relieved today. Still a little bit better than expected, but the market not rewarding it. That stock down 1.5% so far in the German trade. All right, now to your other big money stock stories today, and they include LG, the key Apple supplier, slashing its investment plans for the year. Company reporting its second straight quarterly loss, sagging prices for LCD panels. Just last week, another Apple supplier, Taiwan Semiconductor, also trimmed its spending forecast for the year. AT&T, you might have heard of them. They're reporting a mixed quarter. The company missing second quarter revenue estimates, but added more wireless customers than expected. AT&T's numbers include about 2 weeks of results from its $85 billion merger with Time Warner. And shares of iRobot are soaring this morning. Who's iRobot? Well, they make the popular Roomba vacuum cleaner for people who are too lazy to vacuum their own floors. They reported better than expected results and praised its outlook for the year. iRobot shares are up nearly 20%. There's nothing wrong with robot vacuums. All right, in other corporate news today, there is another high-level departure to tell you about at Facebook. Landon Dowdy joining us now with more on this story. Landon.
Yeah, there, Brian. That's right. Well, Facebook's top lawyer who handled the company's investigation into Russian meddling in the 2016 U.S. election is stepping down at the end of the year. Colin Stretch has worked at Facebook since 2010. His departure comes as the social media giant is the subject of probes by several U.S. regulators over its mishandling of users' data. He has played a key role in crafting Facebook's response to the Cambridge Analytica scandal. Stretch says he moved to Washington several years ago and was thus far removed from Facebook's headquarters in Silicon Valley. In a post yesterday, he says, quote, as Facebook embraces the broader responsibility CEO Mark Zuckerberg has discussed in recent months, I've concluded that the company and the legal team need sustained leadership in Menlo Park. Stretch's exit is the second high-level departure in recent weeks. Elliot Schwaz, Facebook's top communication and policy executive, said last month that he's stepping down. Facebook, of course, reports second quarter results after the close today. Brian, and profit is forecast to rise 30%, while revenue is expected to increase by more than 40%. Shares are up just slightly.
Yeah, maybe one of the biggest earnings results of the week so far. Landon, we'll see you in a bit with more top stories. Thank you. All right, another news from around the C-suite. Lululemon appointing Calvin McDonald as its new CEO. McDonald, who was a Sephora executive before this, will take the helm next month. Billionaire media mogul John Malone retiring from the board of Charter Communications. Malone says he wants to cut back on travel and focus on fewer board positions. Remember, he's got a lot to do. He's the biggest private landowner in the United States. And the head of Amazon's film division, Jason Ropel, is also leaving that company. Amazon has not specified why Ropel is leaving, but he will remain at the company for a few months during a transition period. All right.